Welcome to the Mark Proberg CPA podcast. I'm really excited and honored to have a specialist here in something that we haven't talked about before. And I've heard of Mike through some of our friends. I know some people that have gone through his training as well. And he's nationally recognized in what he does. And if you or someone you know has ever dealt with unresolved tax issues and tax debts and all sorts of challenges, there's a whole world out there of opportunities that we don't do because we specialize in tax planning, but there's all these opportunities that you can do to mitigate those back taxes. And so Mike is going to talk about what that means, what's possible. And also, if you are a CPA listening, when oftentimes you're listening and using my ideas in your practice, well, now you can talk about maybe using some of Mike's ideas as well. So let's do it. Let's get into it. Michael, can you introduce yourself in 60 seconds or less?
Sure. Thank you, Mark. Yeah, my name is Michael Rozbruch. I'm a CPA and certified tax resolution specialist, and I help solo and entrepreneurial CPAs, enrolled agents, and attorneys build highly profitable tax resolution practices, either from scratch or adding on to what they're already doing.
How'd you get into this?
I was in the corporate world for 18 years in my prior life. And one day, as I got fired from a CFO job, I realized I was unemployable, that I was never, ever going to work for anybody ever again. And this industry, the tax resolution industry, was basically just being born. Then President Clinton in 1998 signed the Tax Reform and Restructuring Act, which gave teeth to a lot of IRS procedures. In other words, prior to 1998, the IRS could go into your bank account or levy your wages without prior notice. There wasn't an offer and compromise program. There wasn't really an appeals program. So all of this came into being, and one day I'm watching the televised Senate finance hearings on C-SPAN, and the average American was getting up in front of the TV cameras saying how the IRS ruined their lives, padlocked their businesses, spouses dying from heart attacks from the stress, all because they got behind the eight ball and owed the IRS. These weren't bad people. They didn't have money in the Caymans or offshore or were evading taxes. They were just good, hardworking Americans that got behind the eight ball. I made a decision I was going to help them. That's what I did.
Yeah, there's obviously our first line of defense is we're proactive to begin with, but sometimes, certain circumstances just put you in a position where it's going to be incredibly hard to pay your taxes. And we've also seen instances where the IRS has reinterpreted some of the tax law or court cases to really shift things in a different direction. And sometimes they're really unauthorized to do some of the things you do. Now, you'd be surprised to find that the IRS does not write the tax law. I mean, they can issue, obviously they can issue publications, but the tax law, they're enforcing the tax law, but a lot of times the IRS is wrong about certain stances and actions they do, and they need to be put in check. And also, sometimes it's not even that the IRS is the enemy, but there are all these other opportunities out there that are just not as understandable or available to the general public on how we can deal with the IRS and our back taxes.
Yeah, I mean, look, when the IRS sends a taxpayer a notice for an amount due, a balance due, 71% of the time that notice is incorrect. That's one uphill battle. The other uphill battle today is that, and we advise our members of this. So, the IRS went from 79,000 full-time employees at the end of 2022 to 91,000 as of right now. They haven't been at 91,000 full-time employees in about 20 years. But here's the thing. Those 21,000 extra employees they hired are, and I'm going to say it because it's true, are untrained and senseless. And what our members are finding is before you could make one phone call to an agent and get done what you needed to get done. Now I'm burning it into their brain, our members, that they have to call at least 3 times until they get someone at the IRS who knows what they're doing. So it's very frustrating right now. Imagine the layperson trying to get anything done with the IRS if practitioners are having a difficult time. So,
Yeah.
and there's a huge disconnect from the top brass at the IRS versus what's really going on in the trenches. A huge disconnect. They're saying everything is great. We have all this money with the Inflation Reduction Act, and we're enforcing the laws and we're collecting the money. But they really don't. The rank and file really right now do not know what they're doing.
Yeah, it is a little scary here. And we're going through an audit right now. And I'll be honest, I don't know what childhood trauma this auditor went through to motivate him to take these crazy stances on some of the depreciation elections. They're trying to, what this auditor is trying to do is he's trying to pretty much rewrite the law and reinterpret things that have been, if their stances and assumptions were correct, that would mean every single cost segregation study done throughout the entire country on any single family rental or multifamily residential rental is wrong. So, and like they, the result of their analysis produced a really major, really
Yeah,
significant tax liability, and we're gonna have to fight it now.
Yeah, I'm going to give you a tip, Mark. So I loved getting audit representation cases because there are 3 bites at the apple. So at the first level you're at right now, you're dealing with either what's called a TCO, which is a tax compliance officer, or a revenue agent, an RA. Most revenue agents who have your financial life in their hands, are making $21 an hour. That's number one. Number two, they probably have never taken an intermediate accounting 101 course. Yet they're trying to school you on depreciation. Okay. So what we normally did when we weren't seeing eye to eye with the agent, we would say, go ahead and issue your 4549, which is the audit report, income tax changes. Of course, we didn't have the client sign it. 45 days after that, we got the statutory 90-day NOD notice, which we love to get because then what we could do is, and I did hundreds of these over a year, is petition the tax court. So we would have a docketed case in tax court on this substantiation case. District counsel does not want to litigate substantiation cases. They only want to litigate law or fact cases. So district counsel remanded the case to appeal. At appeal, it was a horse trade, and I'd say 95% of our cases were settled in favor of the taxpayer when we followed that strategy. So don't fret. If you're being represented, or even if you're not, you want to get the case into a docketed case in tax court, and you'll get what you need there.
Well, that's good to hear. Yeah, we are meeting with the appeals office tomorrow morning, and I mean, I have other mentors as well who've been helping me walk through this, and they're like, well, this auditor is really thorough in his analysis. I mean, he's really scrutinized every piece of this. And one key takeaway for the audience here, if you're looking to minimize the probability of being under scrutiny of the IRS, here's one quick tip: is report all your 1099s. Give all your 1099s to your tax professional, because what triggered the audit was he didn't provide a 1099-B showing a capital gain of it, which was insignificant. It was like $26,000. But we did some cost segs and short-term rentals that created like maybe $400,000 of tax deductions. And now every line item is being scrutinized because there's silly capital gain of it.
Yep. That's a good point. Yeah. You don't want to, you want to report all those 1099s for sure.
And then we have another former client who came to us, and he had his tax attorney contact us asking for, some additional documents to support, their audit. And he asked for some 1099-Bs, same thing. And we said, we don't have them. because he never gave them to us, and that's likely what triggered his audit as well. Actually, I talked to him. That's what it was. So it's like all these other things that people worry about. Oh, is cost segregation risky? Is being a real estate professional like? Am I allowed to do it? Are they gonna hit me on the head for it? No. But what's gonna happen is as soon as you give them an excuse to come after you like that, they're gonna question every little thing you do, and some of this stuff may be hard to
Yeah.
really substantiate, like proving that no one else put more than hours than you to materially participate in your short-term rental with a team of cleaners. I mean, we spend hours and hours gathering that documentation and finding ways. So, so much could have been avoided if he just gave us the docs.
Yeah. Yeah. It's a paper. And whenever you're dealing with the IRS, it's a paper blizzard. They love documentation.
So what I'm wondering now is, I'm sure you have some pretty interesting stories here, and we like to hear some good stories here. And I'm wondering, you could probably tell me some good stuff about. Tell me about a client here that was probably maybe looked like their situation was doomed, and some of the things that you were able to do to help them out.
Oh, I have a lot, but one that comes to mind and one I talk about a lot is I had a couple come into my office once. They heard an ad on the radio, one of my ads. They came, scheduled an appointment, and they came into the office, and the wife had no clue regarding the severity of the situation. Vis-a-vis, the husband comes in with a stack of unopened IRS notices. So first thing I do is I go through, I call it the opening envelope ceremony, where I open all the envelopes, throw away, the 6 pages of garbage, and then just keep the actual notice. And there were about 6 or 7 notices. And I added them all up, and they came to about $420,000 in tax debt. And the wife was in tears, just about. She had no inkling what happened. And she turns to her husband and said, "What is going on? What?" And this is the first time the husband came clean to her in my office. What he did was he forged her name. She worked for AT&T at the time. She had a big pension or a big 401k or what have you. He forged her name on her retirement accounts.
Oh,
Somehow got his hands on the money, and he had a gambling problem, and he gambled it all away. We got him into Gamblers Anonymous and had the secretary of the meeting sign off every time he went. So in other words, we pre-strategized with the client what he needed to do in order to get a settlement. And then we went through, of course, their current financial situation, and they didn't have much in way of equity and assets, and their disposable income was not a lot of money each month. Bottom line is we settled that case for about $46,000. So they owed $420. Wow. We settled for $46. The wife they couldn't have been happier. And the reason I tell that story is the intrinsic feeling I got for helping somebody out like that is indescribable. It's so much different than preparing someone's tax return and delivering them the good or the bad news. I mean, people on April 15th have to get their taxes done. But someone who has a tax problem wants to put it behind them. They have to get it done too, but it's a different mindset with regard to the clients, a different type of work. So that's just one story. I had another guy who owned a business, had a lot of employees, racked up about $7 million in trust fund recovery penalties. When you owe payroll taxes, the individual shareholder is responsible for the trust portion of those taxes. And the IRS is a very special creditor. They're the only creditor on the planet that can pierce the corporate veil without a court order and go after the individual. So this guy owed like $7 million in trust fund recovery penalties. And I just played the 10-year collection statute game with a lot of stall tactics and this, that, and the other. And I had the case about 18 months. And after 18 months, the 10-year collection statute expired, and the guy was home free. He got off paying zero and owed $7 million when he came to me, because I knew how the 10-year collection statute expiration date worked and what told the clock, what didn't toll the clock, how to do this particular strategy or don't do this one. So, yeah, so that's
Wow.
another story.
I imagine you made a decent fee on that engagement, hopefully.
You know what? You know what? I didn't, because I was very new in the business. This was during my first year in the business, 26 years ago. I learned from that, but I did not get a large fee. Today, that fee would have been six figures.
Yeah, absolutely. Yeah, you live and you learn. I remember I did a free consultation for a woman, and I noticed that on her Schedule A, that the accountant limited the mortgage interest deduction to 10,000. I said, that's not right. You should be limiting the state interest. I was like, man, I can't believe I found this is really cool. And so she got her prior accountant to amend the return from the free consult to see if we do a plan, and it saved her $8,000 in taxes. And then I pitched the tax plan and showed her what's possible. And I pitched a $5,000 tax plan. This is when I was just starting off. And she said, I can't believe you would charge that much. Oh
Uh-huh.
my God, who do you think you are? I was like, I just saved you $8,000 for free. Like, it's amazing. But, if that happened today, obviously, for someone like that, we would stand our ground on our fees for
Yeah,
sure.
yeah, yeah. It's
Now, regarding this married couple where the husband took the 1090, withdrew the retirement accounts and invested it away, you can imagine what non-tax and accounting question the audience is curious to know about this couple. Do they stay together?
You know
Do you
what?
know?
They did. I mean, there it was touch and go for a long time. But I think the husband, I think he got religion at that time. He actually did. He entered Gamblers Anonymous. He was on the straight and narrow, at least through the time that we got the offer and compromise settled. And I know they were together afterward. I don't know where they are now, but they were together. Yeah, yeah. Most
Yeah,
people would probably split after that for sure.
yeah. That's a tough one right there. Especially because a relationship is built on trust.
Yeah.
But everybody's no one's perfect.
No.
No. So now I'm wondering here. So you went straight from you went from corporate America straight into tax res. So
Yes.
I see a lot of people. Were you a corporate CPA, or did you get your CPA while doing tax res? How was
No,
that transition?
I was a corporate CPA. I got my CPA in the early 80s and went into
Mm,
private industry. I never worked in public accounting.
mm,
Never, I never had a business. I had no book of business when I went into tax res. I had no clients, no book of business, no nothing. And you know what? In a lot of ways, that is an advantage to actually
yeah.
going into the business while you have a traditional accounting business, because it's such a different mindset shift that you have to make, because most accountants don't want to beat up their clients. Most accountants, I can't tell you how many referrals we would get from people that came in where their accountant didn't help them. And they would come into me. I do the consultation. By the way, the average non-filer has 4 to 7 years of unfiled returns, and 50% of resolution clients are non-filers. So they would come to me. They would say to me, "Okay, Mike, I'm going to go to my CPA and have the back returns done." And I go, "Why in the world would you go back to the guy who got you into this mess in the first place? You've been with this guy for
Mhm.
7 or 8 years. You owe $120,000. If he was any good, he would have helped you out already." So even though I didn't do tax prep, my firm did 37,000 1040s over a 16-year period, because I found a couple of really good EAs around town, and we
Nice.
outsourced all the tax prep too.
Oh, nice. Yeah, we I had a similar journey in that I was doing internal audit before I jumped into tax planning. And similar to you, I think I got a bad review on a really miserable audit of like, and the audit was doomed to start. There was no way we would ever have like reliable data on this audit to really effectively make real recommendations. And I just said, this is terrible. Like one engagement or one boss who I never chose can just change the whole tone of my work environment. And I just said, never again.
Yep.
And I also found tax planning to be much more interesting. In fact, I found it fascinating and obsessed over it. And when I realized when I started the practice and did a few returns under another firm, was that when I met these other people from traditional backgrounds, they never had the chance to pursue their interests and actually think strategically. And they were just so stuck in this box of working for the IRS and doing being what I call 1040 factories, and not thinking about what opportunities can we create. Like, how can we help our clients,
Right.
but not just stay out of trouble, but also build wealth and create a fortune and be proactive and think creatively and outside of the box and talk about their taxes before the year ends instead of just
Yeah.
telling you what you owe. And it's been really gratifying thinking like that. And I think there is an advantage coming from a different background and having that fresh mindset instead of having years and years of conditioning to
Yes.
think in this small little box.
Yes. Yes. Yeah, absolutely. Absolutely. And you have to manage the client differently. I mean, most tax resolution clients are big time procrastinators. And if you think you're going to hand somebody, 4 income tax guide and organizers to complete and have it back in your office in 2 weeks, you got another thing coming. It ain't going to get done. So, you got to get on the phone. You got to babysit. You got to fill out the organizer with the client on the phone. And that's part of the job. But, a lot of, and just think about this. An accountant in a traditional practice, you think he's going to get on the phone and fill out the income tax guide organizer for the client while he has 500 other clients? He's not going to do that. So it's a different mindset shift.
So you've obviously met a lot of other EAs and CPAs, and you coach a lot of people in starting their businesses and serving, converting over to doing the tax res stuff.
Yep.
What do when similar to, we're a little more, you guys are reactive but in a good way. And we're
Right.
proactive to prevent people from getting in this situation.
Right.
And I think both of us are doing some form of a value price model here.
Oh, yeah.
Where, if you can save someone a couple $1 billion based on the tens of thousands of hours of research and experience you've been through, you could charge on the value of it instead of,
Right.
well, this may take a certain amount of hours. However, we got to factor in all the time leading up to this and all the time to sell and all the time we've lost trying to sell to people who don't see the light.
Right.
So how do you think how have you seen, like, when people start doing the tax res compared to the other services and the changes they're seeing in their businesses?
Well, it's hard for the practitioner to change from, billing by the hour to value pricing. In 16 years when I had my business, I never sent out one invoice. I never did billing by the hour. I have a cost accounting background, so I actually costed out a lot of the different resolution activities. In other words, how long does it take to do a 433A? How long does it take to release a levy if everything else is in order? How many man hours does it take to do an offer and compromise at a given debt amount and the complexity of someone's financial situation? So I costed all that out and came out with a flat fee billing model, which basically comes out to about 10% of what the outstanding debt is on the liability. I mean, that's the easy way to think about it. So if someone came, owing $150,000, it was a $12,000 to $15,000 case, all in, to do the compliance work, the discovery work, and the permanent resolution work.
Mm-hmm. Where do you get most of your business?
When I was in the business or now with Roz Strategies?
Both.
Well, when I was doing tax resolution, I learned kind of by, not by mistake, but I had a radio guy, a radio account exec come to my office when I first started, and I kept throwing him out of the office. He would knock on the door. Mike, I got this great deal. I don't want to talk to you. 2 weeks later, he'd come back. Mike, I got a great deal. Finally, after 6 times, I said, okay. So he gave me a deal where it was $1,000 for 20 spots, like $25 a spot over 14 days. And they were called wide rotators. They ran from 12 a.m. to 12 p.m. I had no control on when those spots would hit. 2 of them hit during drive time in the Howard Stern show in Los Angeles in the morning, rush hour. So my one phone in my office that I rented would not stop ringing. So I learned that the more controversial the radio personality is, the more rabid a following they have, and they will do anything the host tells them to do. So I learned early on to have live endorsed spots by controversial radio personalities, and that put me on the map, and that fueled my growth. I was actually the number 5 largest sponsor on Premier Radio in the around 2010. I was the premier exclusive tax resolution person for Rush Limbaugh, Sean Hannity, Glenn Beck. So conservative talk radio is where your tax resolution clients are hanging out because they're all business owners.
That's interesting. So we could tell that you're a veteran if you're starting off doing the radio. Are you still doing radio ads?
No.
Yeah, and now I imagine a lot of it's word of mouth as well. And
yeah, I mean, now, that was, I ran that firm for 16 years. I exited that my resolution firm about 10 years ago. And today, a lot of it is word of mouth because a lot of CPAs and EAs knew my story back when, and I used to go to a lot of conferences every year, to hone my skills on the technical end. And a lot of them that I ran into all those years are now members of Raw Strategies. And then the rest of the business comes from social media, Facebook and LinkedIn. And, I speak on certain stages. So that's where most of the business comes from.
Cool. And so what kind of, so now I'm curious to see what kind of people, so we have people listening here. So it's likely that someone or quite a few people here listening, either they or a friend or family member is dealing with some tax issues here. Mm-hmm. So, how much can we accomplish here? What's possible, and what type of people could be helped with tax resolution, and what type of people are like, well, you were just negligent, you got to pay up. What are some determining factors here in seeing who's a good candidate for this type of service?
Almost, believe it or not, you're not going to believe this and you can think I'm full of crap, but almost anybody who owes the IRS can get some kind of reduction, even if it's a small first-time penalty abatement reduction. First-time penalty abatement now, you can request over the phone. There's no forms to fill out. It's an administrative waiver. Look, Mark, I used to have people who can take out their checkbook, write a check in full, and pay the IRS off one lump sum, but they would hire me to be their mouthpiece. They would hire me to get the payoff amount. They would hire me to be the quarterback to coordinate the check. People do not want to talk to the IRS. Practitioners don't want to talk to the IRS. So, I always used to advertise there's a solution to everyone's problem. It may not be the solution that you're hoping for, but there's a solution to everyone's problem. Look, the more destitute you are on paper, the better deal you're going to get with the feds. Okay. If you have a lot of equity in your house and your monthly disposable income is high, you're not going to get an offer in compromise. You're not going to qualify for a partial pay installment agreement, but you may qualify for either first-time penalty abatement or penalty abatement due to reasonable cause. So there's an interview process that we would take everybody through. So even though financially they may be set, there's still a way to reduce some of the debt through penalty abatement.
Interesting. And like sometimes I hear about these stories where people rack up like 10 million, 15, 20 million dollars of tax debt. And I'm like, how did you guys do that? Like, where did all this because taxes generally speaking are derived from profit. So maybe there was like an error in the books, or how did you accumulate all this profit and not at least set aside some money for taxes? How do you think that how have you seen this
Well,
play
some
out?
of it, when someone has that large a debt, believe it or not, it's usually not from an operating company. It's usually phantom income where
Hmm.
they were, a day trader or something to that effect, where they got margin calls and, they were taxed on the difference. They never saw the money. They never got the money that, also think Bernie Madoff. I represented many, many families
Oh no.
during the mid 2000s or so with regard to phantom income due to Madoff's Ponzi scheme. The other the other area where those kinds of debts are generated are with um, shareholders or CEOs or CFOs of companies that owed payroll taxes, where the IRS came against them for the trust fund recovery penalty in the millions of dollars.
Hmm.
So usually that's where, when we saw large $1 million tax debts, it was usually either phantom income or the trust fund recovery penalty due to unpaid payroll taxes.
Yeah, I mean, you really gotta sympathize with these guys who put their fortunes into Madoff.
Oh
They
yeah,
paid taxes on all these years on income they weren't making, and then they lose all their money and have back taxes.
yeah,
Oh, I imagine that must have been infuriated and ruined the lives
yeah,
of so many people.
yeah, and yeah, we represented many. You would probably recognize some of the names. I mean, there's some wealthy, affluent families here in the Los Angeles area.
Oh yeah, I mean, all over the world, it was just crazy the things that they got away with. So let's say we got some people who got in trouble for some things that maybe were in or outside of their control, and they come to you or your team or someone in your group here, and they navigate this space, and we relieve her. We have some sort of compromise, and we're somewhat we've solved that problem. What are some of the next steps that you may talk to these folks about preventative measures, and how do we move forward now?
Absolutely. Well, when you get an offer in compromise accepted, you're on what I call tax probation for 5 years. So, in order to keep that offer in compromise intact, you have to file and pay on time for the next 5 years. If you default, all the money that you compromise comes back onto you.
Hmm.
And I have my members offer what we call IRS transcript monitoring service. So for
Hmm.
either an annual fee or a monthly fee, the practitioner monitors their transcripts a few times during the year to make sure they're filing on time and paying on time. And obviously, if they are entrepreneurs and business owners, they should also engage someone like yourself for forward-looking tax planning so that they can actually build wealth and save money on future tax liabilities.
Yeah, you know, we're shifting our focus to think more about this and being proactive on our payments too, because in prior years when bonus depreciation was 100%, some of our clients and the tax and the interest rates were really low. The clients, a lot of them were thinking, well, a lot of them were thinking to themselves, well, the interest is so low, and I can just take, instead of paying the IRS,
Uh
I'm
huh.
just going to put a down payment on a real estate on a real estate investment,
Yep.
run the cost seg, and the
Yep.
savings from the cost seg will cover the taxes.
Right.
It used to be common that your down payment would create enough tax savings that you get it back in the form of down payments. So it was an effective way of looking at it, and it was like taking a loan from the IRS at a low interest rate. Well,
Right.
that strategy and way
Yeah.
of thinking is a little flawed, a little more flawed now, because now we're at 60% and soon we're going to be at 40% bonus. So you're not going to get as much
And the
tax
interest
savings
rate
from the
at
cost.
IRS right now is, I think it's going to come down, but it's at 8% right now.
Yeah, now it's at 8%. So now you're paying a little more interest. It's going to accumulate faster, and it's going to be a little harder to pay down. And now we got to worry about substantial underpayments as well. So
Yeah, you made a great point, Mark. It's because we would tell clients, they didn't understand that if they owed, hundreds of thousands of dollars in tax debt, what we told them was what you just said. We would say, you know what, Mark, you use the IRS as your bank all these years. It's time to pay the loan back. I mean, that, when you put it in those terms, it's easier for them to understand sometimes, because really what they did was they used the IRS as their bank.
yeah, and now that's not such a bad idea all the time. I'll be honest. When I was starting off, I was doing the same thing.
Yeah,
It's like,
yeah, yeah.
but now I know one of my friends. She's smart cookie. She's taking an advantage of the IRS interest rates by prepaying taxes and overpaying in taxes, and then getting some interest income from the IRS. And I was like, that's sharp. That's good.
Yeah, I don't know about giving more money to the IRS than they deserve.
Yeah, I mean, it's better than the high interest savings account. It'll get you
Yeah,
5.5%, 5.5%, 8%. You're beating it. And we have
yeah.
another client, and this has just been such a pain in the neck. The client is expecting like a $480,000 refund, and it's only because they they made too much in quarterly payments based on a prior
O-
year activity, and
Okay, okay,
the accountant wasn't proactive and didn't acknowledge that the AGI dropped. So they're
okay.
paying all these massive quarterly payments, and the return was filed in mid October, and the refund still hasn't come. And we've been hounding the IRS. Now we have the local House of Representative office to represent us and give us a refund. And the silver lining, though, although it's been incredibly stressful for them and consequently
Interest,
for us as well.
interest.
Yeah, now that 480 is now going to be more like
Yeah,
five like 530 or so,
yep,
or
yep.
extra extra maybe 40 grand coming out of this thing. So at least they're collecting a decent amount of income here.
Yeah, yeah,
Where else are you going to collect guaranteed 8% interest?
yeah. Not too many places.
So there's still a silver lining there. I mean, if they had a little more, if they were a little more comfortable and they didn't really want the cash so bad, I said, hey, let them take their time. Let the
Yeah,
interest.
yeah,
It's a
yeah.
nice investment.
That's true. That's funny. That's an interesting way to look at it. But yeah, you're right.
Yeah, interesting situation there. So, um, we what? So I'm curious now. What are some exciting projects or big things you're working on?
One of the things we introduced two things over the last several months. One is a marketing CRM dedicated to the tax resolution industry. Because most practitioners, accounts have a tough time with marketing.
Oh yeah.
And they think if they have like Pitbull Tax or TaxDome or Canopy or one of those, they think that's a CRM, and it's not. It's a workflow management system. A real marketing CRM manages the client journey from the first contact until they actually become a client. So we developed one strictly for the tax resolution industry, and I basically uploaded some of my successful marketing campaigns into that as well. So that's one exciting thing that we're launching. The other thing we launched in August was, we call it the EA Pathways Program. We realize that there are so many unlicensed practitioners out there that, yeah, you can take advantage of one of the EA exam review courses, but what I developed is a community around this. So not only are you learning how to take a test, we're also teaching them as an unlicensed practitioner how they can make money while they're earning their EA, by showing them how to use IRS transcript module, and also how to install a client care package into their practice. So we just launched it. We had a really good take rate, so we're probably going to roll that out sometime in 2025.
That sounds amazing. I wish I knew about that when I was in accounting grad school, because that would have saved me from some of the silly things I was doing to make an extra buck and afford
Yeah.
rent at that time. I wish I knew about something like that to give me some more meaningful experience for sure.
Yeah.
Yes. So tell me about, so for the folks listening, can you tell us just, if you give us a call to action where they can go and learn more about what you offer to the
Okay.
public in the
Sure.
form of services or
Right.
to the accounting firms, what are some of the things that people want to learn more and connect with you and tap into some of your ideas?
So we have on the website, which is rozstrategies.com, ROZ strategies.com. There's a free 2 hour webinar that introduces you to tax resolution and what's possible. And I run through some scenarios with regard to cases. That's one thing. We're also running. We run every 2 weeks. We run what we call the 5-day to 5K tax resolution challenge, where we can show you how to get your first $5,000 client in 5 days if you do the homework. And that's also on the homepage, rawstrategies.com. If you have a tax problem or you have a client that has a tax problem, you can email info@rawstrategies.com and we'll connect you with one of our members across the country. We have 450 tax resolution practitioners doing tax res throughout the U.S. So we can also connect you with someone perhaps in your area that can help you.
Oh, fantastic. That was Roz, ROZstrategies.com.
Yes.
Awesome. Well, Mike, I really enjoy our conversation and appreciate you coming on.
This was fun.
It's always fun to talk to someone else, a fellow tax enthusiast here. And, we could probably tell lots of stories. I'm excited to share this with our audience. And also, if you guys are interested in being a client, you can go to Prosperl, prosperlcpa.com/referral, /apply. And also you can just shoot us an email and you'll know where to find us. We're all over the place. So I hope you guys enjoyed the show and stay tuned
for
some more great offers. Also, go to the site. We have a lot of free stuff, free 5-minute tax plan, community, all that beautiful stuff. Go to the site. We'll have some fun and hopefully we'll.
Yeah, Mark's the man when it comes to tax planning and doing what you do. Mark is the man.
Thank you very much, Mike.
All right. Take care, Mark. Thank you.